Oh, there, guys. Good afternoon. I think we can just get going and start. Firstly, I would like to say a very good afternoon, good evening to some, but also thank you for you guys. Thank you guys for attending today's webinar. Today is the live trading or live geometric trading market outlook, and today is the 26th of January 2017. Okay, so I've got a couple of things to share with you guys, but firstly, before going onto the charts or onto the patterns that I have spotted, I would be more interested in sharing with you on the general market outlook. Okay, but we're talking about top movers, and of course, there are a couple of pairs that have actually shifted, meaning that they were on the first list and then they dropped down, or some on the lower list and they have actually gone up to be the top 10 or top 3 or things like that. But here, as you guys can see on my screen, I've got the top threes based on the 4-hour, daily, weekly, as well as the monthly chart. So this would give you a bit of an idea as of now. I've just picked this up about half an hour ago, the most. So not much changes on these pairs. But if you're looking at the 4-hour chart itself, we have expected quite a number of what do you call that pairs that have moved the market a lot today. One of it, of course, is CHF JPY. That's not on the list, but it was on the list earlier today in the morning. So quite a number of traders have benefited. Quite a lot, quite a number of pips from there on the CHF JPY on various time frames as well. Apart from that would be the GBP AUD, okay, the pound versus the Australian dollar. And besides that, I think a couple of some movements on various other pairs, including gold as well. So I will talk to you about gold. I will talk to you about a couple of pairs that have got the patterns up and running or formed. So we will talk about it, and we'll look into a strategy behind these pairs. But before that, as you can see on the 4-hour chart, we have got the top three pairs that have actually moved quite a lot as of the US Open, just about probably about starting half an hour ago. So you've got the GBP CHF. Here you could see that the GBP CHF has got a significant downward move. So this is one of the pair that you could start looking at patterns for, or look at correlation to the GBP CHF. We've also got the Euro GBP, as you can see, is a plus sign on the right side under the chain, so that you could understand that the movement for the Euro versus the GBP is to the upside. And then you've got the NZD CHF. But just looking at it at a glance from 4-hour chart right down to the monthly, you could see that you've got some pairs that concerns the pound more. So we have got expectation of more movement of pound, perhaps to the upside on the long term, but downside in the short to medium term for the pound. But we will confirm that onto the charts with patterns as well. Okay, so here you've got GBP CHF, Euro GBP, NZD CHF. If you guys, any of you guys, are already trading these pairs or would like to confirm and look into whether we've got some patterns on it, feel free to do that. But firstly, we will go on to the Euro USD, and I'll give you a bit of a insider's information on the Euro USD. I mean, there's still a lot of reports, quite a number of reports from banks, especially like HSBC, Barclays as well, and also Credit Agricole. They're talking a lot about the expectation on the risk side concerning banks, concerning political as well as geopolitical factors that would pose as risk to the euro. So from medium to long term, they're still looking into the downside for the euro. So we may be looking into a bit of a correction for the euro versus some other pairs. But for the Euro USD, as you can see, I've got a Z-like pattern here. This is a I call it a bullish Z-like pattern. It's usually called a lazy Z pattern because the Z is not really what do you call that, standing up upright. It's actually slanting, so that's why it's called a lazy Z pattern. Now it starts off with a here at this corner here on the left, and then you've got a B, and then B stretch up right up to this point here. C has actually stretched to that point, and then now we're expecting a downward C to D move. Okay, so this is basically what we're looking into. So here we have got quite a number of movement, quite a number of how do you call that, strategy behind this, behind the Euro USD. Of course, it does depend on your equity. It does also depend on what pattern you have spotted in which time frame. So if the trend overall, if we are looking into let's say the 1 hour, 4 hour and daily chart, we just need to understand the overall or dominant trend. Now here, for example, we have got the pattern up and running for the Euro USD, but we have also got the prices. As you can see, if I zoom in a little bit more, you can see that prices, they're just heading downwards. Okay, you've got prices heading downwards, and it's challenged by the 200 moving average, which is the dark blue line right there. Okay, so you've got prices there. Now let's look into the price that it's trading on. So it's quite close to the 1.0696 or 97 area, and this is where it is currently trading at. And we're looking at the what do you call that, the candle itself. As you can see, the candle itself in the 1 hour chart, it's not giving us a strong momentum bearish candle with a long body. It's actually trying to weaken. So it's looking at weakening. So it's weakening in the downward strength only because we have got the 200 moving average there. So it might find a support, or it might think a little bit more, go sideways a little bit, and then pierce through with a bigger candle to go downwards. But overall, we're expecting, based on this Z-like pattern, we're expecting a C to D move downwards. Okay, so that could potentially aim at the 1.05, as you can see, 1.0556 area. So if at all you're aiming at a 1.0556 area, based on the principles of psychological numbers, you would then adjust this number to a better price. So that better price would be above the 1.0550 area. So it's probably best to look into your potential reversal zone, where prices could potentially reverse before reaching 1.0550 area, because 50 is your psychological number, and that would pose a bit of a risk in reversing. Okay, so you've got a bit of a move downwards. Now it's trading at 0.6, and you've got the 0.556 area there, as I've mentioned, or 5.550 area, and that would give you some significant space in collecting some potential reward if you're trading into the downside. But at this stage, if you're looking into the prices now itself, you would need to look at the 1.0680 area. So 1.0680 area is a psychological level, so you would need prices to first come under this area here, under the 200 exponential moving average, reaching the 1.0680 area and going under 1.0680 area, which would pose as a centroid area or trading area. That would be better for you to consider if you're trading to the downside, to wait until prices go under 1.0680, and once it's actually reached 1.0670 onwards, then you've got a little bit of a relief in thinking that the bears or the bearish momentum have actually ruled or dominated the market much more. Okay, so here it's not a very safe area now, as of now, to actually enter a trade, only because you've got higher risk area due to the price that the euro versus the USD is trading against or trading on at this moment of time. Okay, so you would need to wait till prices, as mentioned, go under the 1.0680 area, preferably right down to 1.0670 area, to give you a better trading area that has got a higher probability and lower risk, and then aiming at this area here to be a potential reversal zone, which other traders, most traders, would see that PRZ area to be the take profit zone or area as well. Okay, so we've got that Euro USD 1 hour chart there, but I would like to also share with you on the Euro USD 15 minutes chart. Okay, so here if we're looking into the momentum of the euro picking up to the downside, then we want to only look for the ABCD that would be pointing to the downside as well. Okay, so you're looking at bearish ABCDs. Now here, very quickly at a glance, if you're looking at the 15 minutes chart here of the Euro USD, you're looking at a potential at this area here to have an ABCD type pattern. Okay, so here, for example, if I were to just check with the Fibonacci here, of course, for those of you who are new to the ABCD pattern or using Fibonacci to sort of forecast the D point or the profit or probable reversal zones, then you can always join us here at the Blackwell Academy, where we would provide you with basics information before basics of Forex before we bring you into the intermediate and advanced level to learn about geometric trading at the FX Geometry Institute. Okay, so here itself we have got, let's say, prices here have corrected the 61.8 area, so that is definitely a good ratio or Fibonacci ratio for us to look at. But just as we want to forecast the market using geometric patterns, the first line that you can draw is the ABCD line. So let's say if I start off from this angle here, this candle here, and I'll just drag that all the way down. Give me a second. Oops, I think I've got my chart moving away. So I've got the A to B leg right there. So you've got A to B, and what you do then is to look into the C to D move. As you can see, it's just it's a live chart at the moment here. I mean the live markets. So you're looking at that area there has actually gone through that area. So we're looking into more momentum to the downside for the euro. Perhaps not only on the 15 minutes chart, we need to confirm with the other time frames as well to be able to look into the market direction overall. Okay, and we usually use the long-term charts like the daily, the weekly, and the monthly to look into better prospect in the future of how much room would the euro give us. So we'll do just that. But before that, I'll just want to like to just draw the pattern and show you how the ABCD pattern looks like. And so you've got A to B, usually it equals to C to D. So if I just zoom in like that, you'll have a better picture, and you just do the B to C move right there. Okay, so for those of you guys whom I've actually shared this pattern earlier on based on a 15 minutes chart on the Telegram, they may have already benefited and got some pips out of it if you're trading somewhere in the middle area here. The reason why I say the middle area here for the sell is because we need to first convert this simple ABCD pattern into a geometric pattern. So how do you do that? You just start off with the A right there and attach that right through to D. There you have a centroid or center area, and this centroid center area, once you've marked that through, would be the same line or area that most investors or traders would look into that as a trading area, meaning if this were to be a sell position or a bearish momentum in terms of the trend, then you're looking into selling that under this line at 1.0721. Now 1.0721 as a price itself, as you can see, if I minimize that, you can see that line usually at the centroid area would mark a significant support resistant line as well, and we can do this by looking into the chart, and you see that it's automatic, it's almost automatic, whereby that center line, as you can see, has found support here, and then you've got support there as well. So this is definitely, just to double check, you can always go into a bigger time frame or a different time frame and look into that centroid line that you've actually drawn, whether or not it has given us hints of being a significant support resistant level. And in this case, it's definitely a level that was worth for us to enter the market below that line. So this is how we draw the how do you call that, the ABCD pattern there, and I'll just minimize that to give you a better look. So as you can see, you've got the euro really going downwards at the moment. It's a 6 o'clock type trend. It's got a lot of power, momentum, and that is due to even the nature of candles that you can see. The bearish candles itself are made up of long bodies, and you've got long bodies and shorter wicks. But not only that, apart from that, you could also look into the correction. The corrections to the upside are minimalistic, and that minimal movement is giving you a hint of the reducing power by the buyer. So you've got increasing selling power as opposed to buying power at this stage. Okay, this is based on the 5-minute chart that we have here. So the 5-minute chart itself, as you can see, if you're looking into trading below the 1.0720, that 20 is a psychological number. So usually traders, if upon tweaking that based on the principles of psychological numbers, you're looking at a trading area at approximately the 1.0710 area, or 1.0705 area. It's within 10 to 15 pips below the psychological number of 20. Okay, so this is where we're looking at. I mean, in terms of pips based on the 5-minute chart itself, for those who are scalping, looking at short trades, you've got more or less close to 20 pips on that one there. So for those who've already got that, that's well done. And we're looking at further patterns at this stage, but let's look into confirming the trend scenario. I usually insert the 50, 100, as well as the 200 exponential moving average applied on close. Okay, so if I do that just now, just give you an indication of moving averages that I use. I start off with the 50 with a light bluish color there so that I can differentiate it between the other lines, and then I go on and repeat that step again and apply the 100 right there. Okay, so this is where I use the moving average, especially exponential moving average, to give us an idea of trend. So I don't look into crossing of the moving averages. You know, I look into a different way to confirm the trend. So I go across 3 time frames to do that, and I'll just show you how. We've got 100 right there, and then now we're going into the 200 moving average, which is the last line that you would apply for the moving average. There you go. So we're moving average 100 applied, so now you go on the 200. I'll just put it as the very dark blue right there. Okay, so you've got it right there. Now, upon applying the moving average 200 itself, as you can see, prices for the Euro USD 1-hour chart, the Euro itself is finding it a bit of a challenge. As you can see, it's on 1.0691, and 91, if you're looking at coming downwards, you're looking into heading towards the psychological level of 80, but to the upside, it's at 1.0700 is the other psychological level. So what I'm trying to say here for the Euro USD is trapped in between 2 side level, which is the 1.0700 as well as the 1.0680. So you can easily do that by adjusting the price there, so you can have a better look at where the prices are trapped at the moment. Okay, but in technical terms, or in price terminology, we're looking into Euro finding a bit of a balance at the moment. Okay, so there, that's hence the reason it may be slowing down. It's not, you know, really piercing through the lines as yet, because it's finding it a bit of a challenge, not only based on 200 moving average, but at the same time it's looking at the challenge in terms of price, because it's just too close to the what you call psychological levels on the upside as well as the downside. Okay, so here I would like to just mark that 0700, that's your one psychological level right there. So we've got that on the upside. Now you've got it at 0680, the next one. I'll just apply that, adjust that pricing there to 0680. All right, just like that. And once you've done that, you've got it right there. So here you've got the Euro. It'll be clearer for you to look at this in this way. So you've got your psychological level at the upside as well as the downside, and then you've got the prices just challenging, trying to challenge, piercing through that 200 moving average. So it's finding it tough. So what would be good to notice is to wait till prices go down and look at whether or not the candle would pierce through that zone here between 1.0700 to 1.0600. And once it does go under 1.0680, let's say, as I've mentioned, 1.0670 onwards, then you've got that clear. So you've got the route to the downside cleared out once it has gone under the 1.0680 and below. If at all it found support close to this zone here and heads upwards and go above 1.0700, heading towards 1.0710, then you're looking at more momentum to the upside for the Euro USD versus Euro USD at the 1 hour chart, or on the 1 hour chart. Okay, so that's what we see on the Euro USD 1 hour chart. So in other words, it's still uncertain, mainly because you've got candles in between all three lines. They are not under all three lines or above all three lines. So if they are under all three lines, then that would mark a stronger downward momentum or downtrend. If they are all under the above all three lines, then you're looking at the biasness towards the upside or bullishness. Okay, so this is where we can differentiate between whether or not to take that trade, to stay out, or to participate in that in a trade. Okay, in this case, if they are all in the middle, if candles, majority of them are in the middle of three lines, then when we are in doubt, it's best for us to stay out of the market, wait till the more data is marinated into the market so that we get a clearer picture, and only then we would be looking into more room to trade, whether it's the downside or the upside, depending on what sort of signal we would be getting from the market itself, based on price, based on trend, based on movements, significant support, resistance, and many others, as well as the pattern. Okay, so here we have got it, as I have mentioned, not very clear in the 1 hour chart, so let's just proceed to the 4 hour chart. Now the 4 hour chart is giving us a little bit of a clearer picture. Why? Because it's finding support at the 50 moving average. It's not coming through or piercing through as yet into the uncertainty area between the lines. It's just finding support right there. But again, it's just too early for us to decide at this stage whether or not it's just bouncing off or finding a correction as yet. We just need a bit more time. So here is where we still could be looking into that zone that I've marked based on the horizontal blue lines. Okay, only after it's gone under that zone will it then give you a better downtrend momentum, and only if it goes above and way above that you could look into more a bullish momentum for the Euro USD. And if we go onto the daily chart, here itself, again, it's a picture of uncertainty, and that two line would serve you very well in acting as a borderline. Okay, whether it's under all the two lines or if it is above all two lines. There's another trick here. You can I'm sure that most traders don't actually use this tool, but you've got the 45 trend angle right there. If you click on insert and go onto lines, and you go into trend line by angle, you can simply click that, and let's say we're measuring the angle of this trend right here, the uptrend move on the daily chart. So I can start at the lower, let's say the lower end right here, or maybe perhaps at the beginning here, let's say this one here, and I just would like to mark this line at the 45-degree angle. Okay, so that 45-degree angle will give you an idea of how strong that trend is trading upon what kind of angle. Okay, and that angle of that trend it's quite crucial. So I'll just give you an idea how I do that. You go onto the parameters, you just go onto the angle in degree right there. It's a very simple tool, but this is it's been proven to be quite useful for me. So there you go. So we have got, let's say, the daily chart right there. Now this 45-degree angle would mark sort of a border line, but a bit of a slanting borderline, meaning anything under that 45-degree line would give you the biasness to the downside. Anything above that 45-degree will give you a biasness to the upside. Okay, so while you do that 45-degree, you could see how prices have actually respected that line in some way or another by challenging it, trying to, but not really piercing through big time. But this one here, you've got a bit of a pierce through here with this candle here, but it's just with a wick, and that got challenged again by the 50 moving, where you found resistance at the 50 moving average right there. Okay, so this is quite a good tool for you to have, when you just draw that 45-degree and look at the bigger the move, the better for you to look into drawing that 45 angle. So if I go on to, let's say, the USD JPY, for example, let's just do that, and it works best with an upward type momentum trend. So here we have got an upward move on the USD JPY, let's say on the 4-hour chart, okay, and just going back to that line just now, you can find it again. I'll repeat these steps there. You go into lines, and then you go on to trend line buy angle, okay, and you just simply draw from the very bottom here. You could start it randomly like that, and then right click and adjust trend by properties, and then you go on to this area here, click on under the parameters, you click on 45. So that's 45 right there, and then click on OK. So here itself gives you a great idea about the pattern, not the pattern, sorry, the currency itself, the currency pair itself, USD versus JPY. So you've got the 45 angle there. For those of you guys who are familiar with clock angle, just naked trading, meaning you're just not applying any indicators, but using clock angle, looking at trends. Usually, once you have zoomed out totally, you can actually use this as well as another method, whereby that 45-degree angle is a 1 o'clock type angle. Okay, so anything under that usually marks a nice downward momentum. So here itself, I mean, despite what's going on now for the USD JPY, if it's based on the 4-hour chart, we're still looking at prices under that 45-degree angle. That under that 45-degree angle is it will still mark the biasness or preference by the market will probably be to the downside based on this angle here, the 45-degree line angle. Okay, so while we're there, I'm just sort of giving you that bit of tutorial on the 45-degree angle, which I've not done previously, but I showed my colleague today, and just thought of it reminded me that I could cover this as well. But for those who are very interested in my tutorials, they will all be available on fxgeometry.com. Got loads and loads of tutorials for members available there. So you've got close to about 30 videos just explaining to you, very short videos each, explain to you all the steps and needed in spotting patterns, drawing out patterns, the differences between the patterns, advanced patterns, basic patterns, and many more. Okay, so here we go. Let's go back onto the USD JPY. But just before we go on to that, the Euro USD, I hope it's been clear to some. For those of you guys who are trading the Euro USD or have some questions, feel free. If you've got, just type away onto the chat box. If you've got any questions about the Euro USD, if you are already trading it, perhaps you are correlating the Euro USD with another pair and wish for me to answer some questions about it, feel free to do that. Okay. While I wait for your questions, we'll just proceed into the USD JPY, but we'll start off with the 1-hour chart. I know it's been quite a number of questions have arisen based on the USD JPY. Of course, we've got Trump. We've got Trumponomics going on in action. We've got quite a number of things that I mean, more than things, but it's more agreements and forms that he has actually pulled out from, or signing deals and all that, and his 100-day what do you call that, eye on him on the 100th day of his presidency just kicked off recently. So that would then give us a lot of volatility, I would guess, and this is actually showing in the market at this moment of time. So with that, with what's going on with the dollar, we will also talk about gold. So gold will give you a bit more room as well, because it is definitely dependent on what's going on in the States as well as the dollar. Okay, so let's look into what's going on here. I mean, we've got both patterns here. I would like to also talk about failed patterns, how a pattern could actually go wrong. But that is covered in detail in my videos in fxgeometry.com, the tutorial section. That will be up and running very, very soon. I am actually gearing towards having that done by the end of the week. So let's look into that. And definitely you guys will be informed as well once it's up and running. And for those who are interested in becoming members, feel free to contact me directly, Kenny at fxgeometry.com, or you could easily get contacted uh, by Blackwell Global itself, okay, or themselves. So here itself, we have got two patterns drawn here showing to the downside, but most traders are asking me about that movement now up here. Has the pattern failed? Now, the thing is that when we draw an ABCD move, you could easily pull A to B using the Fibonacci, okay? And let's say we look at one pattern at a time. Here we've got two ABCD or bearish ABCD patterns. One is marked with the blue lines, and the other one with the yellow lines. Okay, so let's start with the bigger blue lines first. So let me just check. I've got a question coming up here. Okay. Hi there. Okay. Got more. Okay, if we've got any questions as well, as I've mentioned, seem to have no questions on the Euro USD, so I'm just progressing on the USD JPY. So here itself on the ABCD, on the blue ABCD, if at all we would like to check whether or not this upward move have actually failed this pattern, all you need to do is have your stop loss close to the 67% level. Okay, you can always adjust that based on psychological numbers too. So here, if I pull the A right down to B, okay, we have got that A to B, you have got that at 61.8, where C have actually landed. But here you've got 67 right up there. So if I mark that 67 area, give me a second. I mark that 67 area right there, okay? Okay, you've got 115.83. So 115.83, is your psychological, 0.80 is your psychological level, okay? So if you want to adjust that, you can always adjust that to 115.70, okay, based on that 67%. So 115.70 could easily be your stop loss level, let's say, for example. Okay, so here to answer your question on whether or not this pattern has failed, the easy answer to that is no, not just yet, because prices is just far away too low, lower than that level right up there. So that level up there would be your stop loss level. Okay, now here you can do the same with the yellow ABCD pattern, whereby you pull your A to B, and then if you're trading that ABCD, you pull the A point to the B point, and you mark your 67%. In the same way, you adjust that number that you see on the 67% to the psychological numbers. And once that's done, easy, you've got that as your stop loss level. Okay, so that's one way of doing that. That's for your USD JPY. So at this stage, perhaps not just yet, but based on the bigger pattern, that's why it's best to trade the bigger patterns on significantly bigger time frames, and then you scale down and look for smaller patterns within that big pattern. So I would be trading, for example, that bigger ABCD pattern there, and that would still protect me in terms of the stop losses, because, or you could choose to do two things: to open one bigger pattern based on a bigger time frame, and then a smaller pattern on a smaller time frame, so you've got a longer term type trend or trade open, and as well as a shorter term trade open. Okay, so you've got two trades, one on the longer term, one on the shorter term. You can do that too. So here itself, if I pull the based on the yellow one, okay, the yellow ABCD pattern there, if I mark that from A to B, I would then mark the 67% would be right there. Okay, so there. So that one there would be my, let's just, okay. So there you go, 11468. That could be my area of stop loss. It hasn't reached that area yet, so obviously have not been stopped out yet. But in saying that, this could still be, let's say if it goes just before that 67% area or before your stop loss level, and it start coming downwards, then you can easily adjust that yellow ABCD pattern into a another ABCD pattern, because that would obviously stretch out a little bit like this. So your B2C would stretch out like that, okay? And you can still consider that again as your ABCD. So let me just redo that for you. Okay, so you've got A, B, let's say C around there. We would need C to first make a correction in order for it to be a more solid C point. At this stage, it's a bit too soon to do that. Okay, so here you go. Once you do that, now you've got that, and we'll just adjust that because it hasn't reached the 67% of A to B or have hit your stop loss area. And the stop loss area, for your stop loss, you could have an easy two option. Okay, one is, as I've mentioned, 67% of the A to B area to be your stop loss, or you could use the risk to reward ratio of 1:1. Meaning if you've got from your entry point right up to your take profit point, you've got a number of pips, let's say 50 pips, then you would equalize or equal that to your stop loss number of pips. So 50 will equal 50, so you've got 50 pips stop loss as well. Okay, so that's basically an easy way to you got two options. You could use either one, or you could combine both in different trades. It's entirely up to yourself. Okay, there we go. So here we're still looking into a downward to the USD JPY right there. Okay, so we'll go to there, and that gives us a 3 line there, and that would be your zone of your PRZ. And if we are combining this A right to the D area there and look into the center point, then we're looking into the center point right there. So your center point would be at 113.43. I would adjust that to 113.40 as an ideal trading area. So that zone right there would give you an opportunity. But at this stage, your pending order wouldn't have been triggered. Your fingers wouldn't have been burned anyway, because you're not looking into trading it on the spot. You're setting up your trade. It's a set and go type method here. If you're using patterns, it's easily done that way, or easier done that way. It would take your emotions out of trading, and you simply need to key in the right numbers tweaked based on principal psychological numbers, and then input your exits or your take profit area as well, based on the potential reversal zone right there. Also needed to be tweaked based on the psychological numbers. Okay, so we've got USD JPY 1 hour chart covered. I wonder whether we've got any more questions here on USD JPY. If we don't, we'll just move on swiftly into gold. Quite a number of questions on gold, and right after gold we'll look into Euro JPY. But you guys can feel free to look into for us to look into the pairs that you would like me to look into, okay, based on patterns. So feel free to type out onto the chat box, and let us just look into the USD JPY. Now we're still on the USD JPY 1 hour chart. Okay, and on the 1 hour, we've got a bit of a challenge there with prices, as you can see, right? The C point right there, it has sort of peaked out of the 200 moving average. Okay, but let's go on to the 4 hour chart and look at what's going on there. Now here I need to zoom in so it becomes clearer for you. This is not a very good sign of clarity of the chart, of the candles, of the movement of prices, mainly because we have got the prices in between all three lines, and that's usually not a good sign. If you've got candles or prices they have got to be under all three lines or above all three lines to increase the clarity of the trend. Okay, at this stage, not just yet, but we're just waiting. We wouldn't be hurt in any way because we have got that planned up for us. Our potential entry trading area would be at that zone there. So that is where you as a trader could tweak that based on psychological number at that moment of time, based on your risk tolerance as well, to either enter earlier or only after it has actually crossed that. That's entirely up to the trader himself or herself. Okay, so still it's not very clear on the trend side in the USD JPY, but we're looking at the biasness on the downside, still biasness on the downside, mainly because of how candles are being challenged or finding resistance at certain area more than support at this stage. Okay, so if we go on right to the very long-term chart for the get now. Here itself, let's say it's the weekly chart here. Now I would like to just share with you guys something that I've noticed on the weekly chart. Okay, so here, let's see. If it is based on the weekly chart, we have got a potential cup and handle type pattern. Let me just show you something. If I pull the Fibonacci from the bottom here right up to the top, I have got that support right here based on the monthly chart. Sorry about that, not the weekly chart, but the monthly chart. We've got it at the 50%, and that is actually a sign of a potential handle of a cup. Now, for those of you guys are wondering what am I talking about, this cup and handle, I'll just draw it out for you and then explain later on. Okay, so you've got sort of a curved cup-like formation right there. Okay, now it has made that downward move there. It's meant to, if at all, following the cup and handle pattern, to actually make that break upwards. Okay, so once it does make that break should be a breakout along that area right there. So there you go, you've got a cup. Okay, so once it has gone past through that, it might make a little pass through that level and then come back, and only then a bigger move to the upside. Okay, that move to the upside from this area, the mouth of the cup onwards, could be similar to the length or the number of pips from the bottom of the cup right there to the top area of the cup right there. Okay, so we need to then look into fundamentals to look at whether or not it would feed more data into bringing the prices upwards to follow that pattern through. If it does, chances are once it has broken out, if it does, then it's got a better chance to complete this cup and handle pattern. If not, then you've got more fall, expectation to the downside for the USD JPY. But here, based on the monthly, we've got this big cup and handle pattern, and this is looking like a bit of a risk or threat area that would just hint us that to the long run, for the long run, we're talking about perhaps until the end of the year, where we could actually see prices just appreciating for the USD JPY. But of course, prices don't actually trade in a straight line, so we may expect lots of correction as well. Okay, so I've got some question here. Sorry to keep you guys waiting. Hi there, Michael. How are you doing? Michael is asking for the GBP CHF on the daily chart. We can get to that. Not a problem, Michael. Just give me a second. We'll go into gold first, if you don't mind, because we're looking into USD JPY and dollar versus the yen, and then it's best, once you move on from dollar, we go on to gold, give you an idea about gold, and then we go on to your GBP CHF. Yeah, hope that's okay for you, Michael. Okay, so let's go on to that. We've got and this is my sort of hint on the market based on this cup and handle pattern. On the long run, this is what we may expect, but this is the wonders of trading pattern, because we've got this huge cup and handle pattern, and what you can then do is look into other patterns like the ABCD. Now you've got a bearish and bullish ABCDs. You could trade both bearish and bullish ABCDs, but you would need to be aware of the overall picture. You know, you want to know, or you want to keep aware, or keep tracking on how the progress of the price, whether or not has followed through that right side of that handle of the cup. Okay, and if it does, that means you're closer to the breakout area right there. And if it is a breakout area there, then if it does break out, then you're looking into a better chances of this completion of the cup and handle pattern. Okay, so that's on the USD JPY. Let's just go very quickly on to gold, and I've got a couple of things to share with you on gold itself. So let's just go there. I'll just get that out of the way, erase that drawing right there, and go on to gold. Okay, so here is what's happening with gold. Now, because we've got appreciation of the US dollar, there may be a potential depreciation of gold. Now, here itself on gold, on the 4-hour chart for gold versus the dollar, we're looking into a potential Z-like pattern. This is a bullish Z-like pattern that starts off here at A, and then you go down to B, and we usually, as geometric pattern or pattern traders, would look into trading at this last leg of C to D. So here, because the C to D leg is to the downside, then it poses some selling opportunities for the gold as opposed to buying opportunities as of now. So here, even though we're looking into the 4-hour chart, you could always look into potential ABCDs to the downside for gold. Okay, but here, let me just clarify on the ABCD pattern. Usually what happens is that we have got a pattern that has been confirmed by Fibonacci. So there are a couple of rules that I've actually gone over, and this has you know, flagged out to be a pattern that may actually turn out good, or could be challenged by some correction first. But that correction is only normal for me as a geometric pattern trader based on this Z-like pattern. The reason is we usually look into a potential ABCD type shape like that to the downside. Okay, so that C to D leg of a Z-like pattern usually is made up of a ABCD formation. So if at all at any stage you look into a correction, then that correction would be the B to C leg of that ABCD coming downwards. Okay, so that C to D is never a straight line. It's usually an ABCD type formation. So I'm just waiting for a bit of a correction. If it does happen, then it might confirm a stronger move to the downside after it's made that correction. Okay, for gold. So that correction, just to give you that bigger picture, if at all you're looking at the 4-hour chart, for those of you, let's say, have actually bought or have bought quite early on gold, okay, I must say that that correction may not be sufficient to cover everything that you've put onto gold, okay, as yet, because the trend that would support that Z-like pattern for now, at least until it completes at the reversal zone, is to the downside, not the upside. So you might see some correction first, but that correction is to then prepare itself for the fall to this area here between 1171 to 1163 area. So that's my reversal zone area. So you've got ABCD pattern, but in the form of a Z-like pattern. And this is a bullish-like pattern. Why? Because once it's gone in this area here, play around that area, and then you've got it shooting upwards only upon reaching that PRZ area. Okay, so that's your Z-like pattern. Let me just erase that drawings right here. Okay, and just share with you what I could see on this Z-like pattern here. Now, starting from A right there, there are reasons why I've pulled the A from that area there and not anywhere else higher than that. Because once I've pulled that A to B, you've got the peak at the very top, that's your C point here, because your A is there, okay, B, then you've got C. The C point, it corrected very closely 161.8, and that's one of the criteria that I look at as well. So there are a couple of ratios, and all that will be covered on the advanced section of the video tutorials once the fxgeometry.com website is up and running. In the members area, you'll get all this information presented to you in the form of a video, very short videos on different topics, so you'll get a better idea. You can rewind, you can enter the members area as frequent as you want, and rewind the videos and have that topic learned at your pace. Okay, so ABCD Z-like pattern on the 4-hour chart for gold. Now here we have got another confirmation, usually is right after, just before that move right here. So we've got a downward move and then a huge big move upwards there. So that's one of the criteria that I look at. So the various criteria I look at to confirm that this is a high probability type Z-like pattern. So this is what I expect. Of course, it's never 100%. It's a game of probability, and you've got risk involved in that. So here, what I will be waiting for is to look into correction. So when there's a correction that happened, that would be a confirmation for me as a geometric patterns trader, whereby I could see it moving downwards even more possible. Okay, so if we go on to the 1-hour chart right there, okay. We could see that you've got loads of rooms down this way on the 1-hour chart. Okay, there we go. But still, it's quite clear here. It mirrors the 4-hour chart pattern there. And again, I'm expecting correction. So don't get overexcited with the sell type order, because we may look into a correction very, very soon. Okay, so it's at 1188 at the moment, 1188.20. That's a side level there. Under the 10 would give you more room to the downside, but again, for the whole number of 1188 or 1188 itself, it's $8 more than the 80 side number. Okay, so to look into prices, chances of prices going downward more, if at all prices reaches the 1170 area, that means about $10 below the 1180 psychological level, then you've got more chances or momentum or even biasness to the downside for gold. Okay, so this is where it's happening. Quite a number of factors. If you guys look at, we'll cover that as well in the fundamental area of the videos in FX Geometry, on gold, on China's plan. So I'll be having videos for you to explain certain games, insiders game, geopolitical games, and factors that would actually impact gold, and why is it that China is a big factor in what's going on with gold. How much treasuries are they actually buying, or are they actually stopping their whole buying of treasuries? That all would impact their gold hoarding, because they have been hoarding gold for the past 5-6 years. They're aiming at about 8,000 a ton of gold to be the dominant market player or market price manipulator for gold, okay, for China. So that will be also covered. We've got a couple of geopolitical videos, so you get an idea of how you can combine insiders information, fundamental analysis with pattern or geometric patterns analysis. Okay, all right, here you go. We've got gold there in a 1-hour chart, but that's it has been clearer on the Z-like pattern on the 4-hour chart. Hence, I've started with the 4-hour chart earlier on, so that would give you a better idea on the intentions, the estimated intentions of traders or the bigger investors of correcting that price potentially before reaching downwards here. Okay. All right, there you go. For gold there, so I think it was GBP CHF that we would be looking at right after this, Michael, if I'm not mistaken. We'll just look into that. Give me a second. GBP CHF. Let's do that right away. Okay, got GBP CHF there. Let me just check, Michael. Okay, Michael, no problem. JBP CHF. Okay, go. Uh, okay, I think I better leave all these pairs right here for you. But I could change that one there. GBP CHF. Okay, let's look into that. Before anything else, I'll just start with the 1 hour chart for GBP CHF, which is what I usually do is have it in a cluster or set of three time frames. So I'll start with the 1 hour and then I go over to the 4 hour and then the daily. Now, as I usually mention this most often to traders is that your time frame, selection of time frame should always be based on your equity. Okay, of course, we've got some formula for that on the money and risk management side of things that will be available on the Blackwell Global Academy as well as the FX Geometry Institute. So we will have that available for you. And in that way, once you understand that side of things, elements of risk and money management, you'll also be able to understand the link between your equity and your time frame. So smaller equity usually is probably best for you to look into a set of three smaller time frames. If you've got bigger equity, 10,000 and above, and all that to cushion your corrections as well, only then it's possible or better for you to look into the 4 hour time frame and above if you've got 10,000 and above on equity. Anything less than 1,000, usually from experimentations as well with traders, I have seen that it's probably best for them to stick with the 5 minutes right up to the 30 minutes or less than the 1 hour time frame for any deposits, fund or capitalization under the $1,000 deposit level. Okay, so this is all your funds, basically your capital. Now this is where we look into the 1 hour chart first for the GBP CHF 1 hour, and we can see that it has pierced through right there, and but let's look into the price straight away. We've got 1.2566. Now here itself, it may be looking like it found some support right there, but it's just not very clear because it has found a bit of support moving upwards, and then you've got a bit of a bearish candle at this moment of time. So it's not a solid type support for me. And if at all, you've got the site number at 1.2550. Okay, maybe it has found support at that price right there. It's at 2533. It was 35, so above the 20 site number right there. Now that's not a good place it has found support, so I would see that as an indication that I've got more room to the downside there. But again, it is in between all three lines, not a very good area to consider trend analysis or to know what trend it is trading at. Okay, so here, if we look into the 4 hour chart for the GBP CHF, we get a bit of a better idea in terms of candles moving above all three lines, but the three lines are not clear enough, meaning that the three lines usually, once candles are above all three lines, the three lines shouldn't actually touch each other. It should actually be really clear, like these three lines here. It should be pointing upwards without touching each lines like that, and once it's clear and it is quite far apart from each other, and then you've got candles that are bullish moving upwards, then you've got a better clear indication of an upward move. So hence the reason I've mentioned that in the 1 hour chart, it does look like it's giving more signal to the downside. The biasness is to the downside, mainly because that support is just hanging right through between the two lines. And also if you look left, there's not really a significant support at that area there. So that is just a bit of a false support type movement there by the GBP CHF. So that would only usually signal to me a downward type move is coming through. So here we have got 4 hour chart right there. Now we're trading at 2567 still, and we're looking into more dominant candles, bearish candles here. So that bearish candle here does confirm a little bit on what I've mentioned in the 1 hour chart. So even though we're looking at candles above, we're looking at this big movement up there. I am quite I wouldn't say certain, but I look at hints or probable hints hinting me of more downward type movement. But if you would like to look into or feel more relief in wondering what the trend is, then you would need to wait until price go under the 1.2550 area. And once it goes under the 50 area, say at 1.2540 area, then you've got a better hint or bias to the downside for the GBP CHF. So it's a bit of a waiting game there, but it's not really a good. It's a little tricky, this one here. It's giving you some movement to the upside, but then if you look left on the 4-hour chart, you've got this area here as your potential resistance. So if you draw a support resistance zone right there, based on the body. Now this is a reminder for you guys, for you guys who usually draw support resistance lines. It's best not to have a single support resistance line. Usually best for you to draw a zone. So that means it should be made out of at least 2 lines. So here I've got it drawn based on these cluster of candles here, and firstly on the highest body, and then secondly on the highest wick. Okay, and then you've got your zone right there. So once you've got that, then you could see that these 2 lines, whether or not you need to confirm whether or not you could see significant or spot significant support resistance there. As you can see, you've got resistance right there, and then you've got some more resistance right there, and then you've got some support. That's good enough to look into what do you call that, to count that as a significant resistance zone. So look at that, there's some more there. And the other way of looking at it, and to make sure whether or not you've drawn that support resistance zone correctly, is to also look into previous action of candle piercing through with long candles, with long bullish or bearish candle. Has it pierced through that wall? So we see that zone of support resistance as a wall, as a zone that needs to be pierced through with longish candles, and then that would then signify that level to be strong. Okay, so here itself, as you can see, you've got longish candle right there, you've got long bullish candle right there, and then some more up here. And if we look into more, there's nothing on this side of it, but that would be sufficient enough to consider these 2 lines between 1.2634 and 1.2658, okay, as your area where you could see that as a border. Okay, so here it's finding resistance, so that's confirming what's going on the 1-hour chart, Michael. So that is giving you more hints to the downside for the GBP CHF. Okay, so if we want to confirm, as I've mentioned, more power by the sellers, then you want to wait for prices to go under 1.2540. Okay, sorry, under 2550, but then reaching towards the 1.2540, then you've got more what do you call that, more confidence in a way, to confidence of the trend to be more to the downside than the upside. Okay, if we go on to the daily chart, you can see I don't actually see any clear pattern at the moment for the GBP CHF, hence the reason I'm using price action for you to consider that, to look into where it's trading at the moment. So there you go, and this is a very clear one as well. You've got prices, not finding room to the upside. It's been stuck, being blocked here a lot. Price got stuck here, and then you've got more room. You thought it had more room here after it has actually gone above, but then it's looking like it's finding more resistance here. Okay, so only upon piercing through with a longish candle and go above 1.2660, let's say, and go above that, then you can find more bullish momentum. But again, if it does go above that, then the next resistance would be that 200 moving average right there. Okay, so there you go. Here itself, if at all you find more, how do you call that, more room to the downside with a longish candle piercing through and going under the 50 moving average, then I think you could find a nice clear A, B, okay, C, D pattern to the downside. So perhaps it's best to wait a little bit more for prices to go under 2550 and spot for bearish ABCD patterns. Okay, all right. So that's basically it, Michael. I hope that's clear for you on the GBP CHF. All right, most welcome, Michael. Okay, guys, and that's basically it for the GBP CHF. We've covered a little bit on the gold as well, and let's just look into a couple more. Let's just look into the USD CAD right there. USD CAD on the 4-hour chart. Let's go into the 1-hour chart first. 1-hour chart looking like it's finding a lot of resistance right there based on the 50 moving average. Is heading downwards. It's got lots of momentum play to the downside at the moment for the USD CAD. Okay, and this is based on the 1-hour chart. As we move along the 4-hour chart, we find that candles are quite far away from all three lines. Again, you've got more momentum play, and the dominance are from the bearish type candle. And then if we go on to the daily chart, again, we've got more room to the downside, because we are looking at candles are all under three lines right here. This is quite, it's not too bad, these three moving averages, because they don't actually touch each other that right there, but it's just the angle of the three lines are not that sure as yet. Perhaps it's just starting to pick up on the downside, but let's look into 4-hour. If we go into the 4-hour chart right there, the USD CAD, you could look into that area right there as your A, and down B, C up there, and then headed right downwards. The reason why I mentioned about this area here is when you find corrections, you know, based on any three lines here, that's a good point to find the A point or even the C point once it has actually gone and touch any one of these three lines as resistant, let's say. Okay, so that's the USD CAD. GBP. As one of the pairs that I would like to talk about would be the GBP AUD, mainly because it's one of the top movers this morning. It's moved quite a lot. It's been driven by perhaps investors, big investors or the big boys. Here we've got prices on the 1-hour chart. It's looking like it's on bearish mode, but we had a bit of a you know, expected correction right there. Okay, and it hasn't really touched there. It looks like it may actually pick up. So this is looking like it's got more momentum to the upside, and we're looking there as well. It's got more momentum upwards. It's above all three lines. The same goes, I think, on the daily chart. It's a little different. We've got a daily chart here. It's trying to pierce through. It has pierced through a little bit through the 50 moving average, and it's being challenged now by the 100 moving average right there. Okay, so GBP UAD on the daily chart, because it's uncertain. Why? Because you've got candles piercing through, but not only that, they're in the middle of all three lines. So it's not really a good area to consider. So myself as a trader, what I usually do is if I find candles trading in between three lines, they're not far away under the three lines or above the three lines, then I would usually ignore that time frame for now. I just go on to lower time frames to look into more. I would say I'm seeking for clarity of the trend. Okay, so here itself we've got 4-hour and 1-hour signaling to us more move to the upside, and then we move lower and look into whether or not we could find more hints, clearer hints to the upside. But unfortunately, for now at least, because GBP AUD has moved quite a lot, and it was very clear this morning once market opened. I mean, from Australia itself right down to the London Open, it was doing great, but then now it's sort of maybe moving into consolidation, but it's just not giving you that clarity that it had since this morning. Okay, what about Euro JPY? Just a little bit on Euro JPY. Now here I'll draw very quickly a bit of a Z-like pattern, but you can combine that Z pattern with a big move that would make that Z pattern or turn that Z pattern into a W-like pattern. And a W-like pattern is a bearish pattern. So let me just show you what I mean. With that, we start off with the Euro JPY 1-hour chart. Okay, and we've got a move right there. So let's say we could spot that one easily here. Okay, there we go. We've got your A to B right there, and what you need to do when drawing A to B to expect that C to D move, you simply carry that through. So AB equals CD. So we've got the C to D leg right there, and we've got a potential move A to B. Sorry, not potential. Previous past move A to B leg. So we've got A to B right there, and then its correction was from B to C. So that drop down right there is your B to C move. So there you go. You've got just a pattern. It's not yet a geometric pattern as yet. Okay, so we usually start with a basic foundation type pattern, which is the very common ABCD type pattern. But of course, before that, you would need to checklist. You need your trade plan to checklist on a couple of other things to determine the trend, examine the sentiment, psychology of market, and everything else. Only then to move into confirming it with your trend. Okay, so here itself you've got an A right there. Okay, A, B, C, D. Okay, upon checking the trend, my trade plan, I find this pattern to be somewhat high in probability and low in risk. But of course, to reduce that risk further or increase that probability, you need to convert that simple pattern that we see just with our eyes and confirm that with Fibonacci ratios as well. But before that, let's convert this chart pattern into a geometric pattern. So once we get that trend line right there and we pull from your A right to your B, there you got a geometric pattern right there. Now that geometric pattern serves us in a way to find your trading area, meaning if you've got your centroid area right there, that would then act as a good area for you to trade. Now if you're looking to the upside, then you're looking at an area to trade above that line of 122.04. So here, if we tweak that number above, because we've got a bit of a correction right there, yeah, candles coming downwards. So let me just zoom in a little bit to get a bit of an idea. We get that downward momentum. Whether this is a correction or not, okay, it's not really our concern as geometric patterns trader, because we would like to first look into price action, and based on price action, if we convert that, once we convert that into a geometric pattern and then we look into the price, we want to tweak that based on psychological numbers. So 122.04 is not an ideal how do you call that, buy entry area, let's say, because it needs to be above 122.00 at least by 10 pips. So 122.10 would be an area that would mark more momentum to the upside. Okay, so and 122.00 is your exact psychological level, your 00 psychological level. So here, as you can see on a live market, you can see that the candles itself has just got challenged a little bit. You know, it had a strong type body, and then you see it just moving at that area, at the dot there, and I think it is trying to flirt a little bit with the 122.00 psychological level. Okay, so here if we look at a bounce upwards, then to be safe, we want to look at the 122.20 area, and once it reaches 122.30, that would be an ideal trading area to the upside. Okay, but as of now, it's proving to be quite risky, but if it does actually pierce through downwards, it would find more challenges here at the 3 moving average right there. Okay, for Euro JPY 1 hour chart. So there you go. You've got that roughly how it looks like. It's just that in terms of timing, it's not the best time for you to enter your trade straight away, because it is at risky levels, mainly because it's just, you know, challenging that 3 moving averages right there, and most importantly is price. It's just not at the right price as yet to give you a clear picture of a bullish sort of biasness. Not at this stage, not yet as of now, mainly because even though we've marked the C to D potential move upwards, it's just not given us that strong enough reason to participate into a buy or even sell sort of order at this stage. Okay, so there you go for the Euro JPY. Now, Euro JPY, just to share with you guys, it's one of the best pairs to trade on Thursdays. On Thursdays, Euro JPY's average peak movement, usually between 140, 160, would go up to about 210 or 220, even 240 at times, depending on how much the market has been influenced or impacted by data releases or news of the sort. It's mainly got to do with how the Japanese have actually created in their system to execute and keep orders before the weekend comes and things like that. So it does actually impact the how do you call it, the movement, the average movement pips of the day. So Thursday has got high, not only a bigger reward potential, but also it would create much more momentum, volatility as well for this pair. Okay, so Euro JPY on Thursdays, as well as GBP JPY and some other Japanese combined pairs. Okay, the yen combined pairs. All right, there you go. But Euro JPY and AUD and GBP JPY would be one of the best ones starting from Wednesday, usually GBP JPY, but Euro JPY usually starting the morning of before London Open, is usually the Australian Open onwards, and looking at more potential throughout the day for Thursday's Euro JPY. Okay. All right, there you go. I've covered a couple of pairs already for you guys. Perhaps you guys want to ask questions or have got other pairs that you would like me to look at before we wrap up the session for today. And just to remind you that we've got these sessions running, every week, twice a day, every Mondays and every Thursdays. Okay. So we've got chances of you guys gathering up questions and looking into trade ideas with me, of course, and share, and us sharing these ideas amongst us. Okay. So any questions at all, guys? Or is that clear, Michael? Your GBP CHF. I hope that's been clear for you. And you guys have asked me questions onto the chat as well. I know some of you guys have been very active with CHF JPY, and that is definitely a pair that has shown a lot of movement. As you can see, the CHF JPY on the 4-hour chart, as you can see, is lowering down on its momentum to the upside. As you can see, the candle there shows, but it may be a sort of correction at the moment. There may be some room to go upwards towards the 115.07, but to be on the safe side, it would be best to wind down your trade before reaching the 114.90 area, because the 90 area is very close to the 115.00 psychological level. Okay, so about 10 pips below that would be ideal for you to look into, because if you look left, you can see that you've just got a zone of resistance there. So we just want to be on the safe side on that side. Okay, all right. That's basically it, guys. If you guys have got no questions at all, I would like to thank you guys. I know we've got a bit of a crowd today, people from all over the world. We've got people from London itself, China, Malaysia, of course, Africa. Quite a number of people from various places tonight. So different time zones. So I'd like to thank you guys. Thank you guys for that. And if you guys have got any direct questions you want to ask me with your screenshots, feel free. You can email me at kenny@fxgeometry.com. Okay, you can email me there, and feel free with screenshots or any sort of questions that you wish. I'll be happy to help you. And you guys can also join me on the Telegram group. I think most of you guys are on the Telegram group. If not, again, email me, and we shall then communicate and guide you through in joining the Telegram group. Okay. Okay, guys, and that's it for now, I guess. Let me see. I think we've got questions now popping up. So, okay, let's see. Thank you, Michael. Yes, you're most welcome. Okay. Thank you, Mr. Manusami. Okay, so a very good evening to you guys. I would like to say thank you. Okay, thank you very, very much. I know I didn't actually run through the risk warning, but I just want to just give you a bit of a heads up for whatever that I have what do you call that shared with you today. It's mostly uh, uh, for educational purposes only with regards to the principles of psychological numbers as well as the geometric patterns itself. So as you guys know, Forex and CFDs are leverage products, as you can see on this risk warning here, and it does involve a high level of risk. Okay, so be sure to ask lots of questions as well, with your mentors, educators as well. And for us here at FX Geometry and Blackwell Global, for participating in today's webinar. Okay, and hope you guys are aware of the risk warning here as well. And again, once again, thank you very much. Have a very good evening and see you again on Monday. Okay, thank you. Bye-bye.